Hi there, everyone. It is Kim Crumpus, and I want to welcome you. If this is your first time to my channel, welcome, big warm welcome. If you like what you hear on this channel and you like what you see on these videos, I'd really appreciate it if you submit a like or hit the subscribe button so you can be informed of when I make another video. So today I want to talk about the one thing that makes all the difference in how much money you make trading. Let's go ahead and get started. The 20-second trade plan, which I'm known for at the Price Action Traders Institute, and also I want to talk about just briefly red news trading strategy. I'm not going to go into detail on these because you can buy the course and get that information inside the course, but I'm going to give you enough so that you can understand how I approach trading and how it's taught here. All right, so this is a red news trade. You're looking at the euro dollar. This is my entry right here, and I have an 8 pip stop. I like to take screenshots of my trades. I also make video clips that I put out on Twitter. And if you want to, you can see my trade video clips at Price Action Kim. The next trade is what we call a trend trade. It's called a yellow line trade. We use a yellow line so that we get a visual. We want to know, where do we enter this thing when we get a trend going? So let's go ahead and do a quick trade breakdown on both of these pairs, the euro and the dollar yen. I believe that when you see something, it helps you solidify how to trade the market. It also helps you compare and take a look at your own trading to see, hey, am I doing this in a similar way, in a way that's making money? If so, great. If not, what do I need to adjust? All right, so red news trading. This was the first trade, right? Nice acceleration to the downside. I get short right here. Now comes the trade management portion of this. You can see, or should be able to see, I sat in this trade right here for what? 1, 2, 3, 4, 5, almost an hour and a half. And it came to my entry 3 times. And at this point, I thought, ooh, I was getting nervous because what? Time had gone by and the trade still wasn't taking off. And then, as luck would have it, the board started to move, which is great. Still early in the session. I like the timing of this. I'm ready for the short to develop. It does. It breaks this low that it put in over here and continues down into that first target at 1150. Because it's still early in the session, I'm going to try to work this trade for more. So, of course, trades sometimes, if they're not in a runaway market, they will go sideways, just like it did up here. Okay. And in fact, it did. It went sideways for what? Just about a half hour, 2 candles worth. And then it started to take off. And then finally breaks this low down here. It was at this point that I moved my protective stop. Now I want to go ahead and lock in profits. I use an 8 pip stop. So if I'm locked with 40 pips, that means I've got a 5-to-1 risk to reward. I'm going to make 5 times my risk, which is, in most trading circles, outstanding. And I'm targeting down here at 1120 for 66 pips, which is what? 8 times. So 8 times my risk would be 64 pips. If it comes down here, that's what I'm aiming for. And you can see it starts to take off again and moves down very, very nicely. This candle develops and actually comes down and hits my protective stop. Not my protective stop, but it hits my target. Hits my target for 66 pips. In fact, I was on Twitter live talking about this trade, and it hit while we were on Twitter trading live. So the first trade, euro dollar, red news trading, which you have to do a quick 20-second trade plan right before the news to get a feel for what's on the board and what the pairs are doing. All right, let's look at the trend trading trade, the yellow line, dollar yen. So over here, this trade had broken out, nice acceleration to the upside, had just put in the start of a trend, measured it, and put the yellow line here for the first pullback, get in the trade long using a 10 pip stop, and you can see, wow, after this pullback, price just accelerated through those highs and took off, coming through a couple candles later through that first target right up here at 140.20, came through it with really nice acceleration. Notice no pullbacks. Once this happened, that was it. There was no way to get back into this market. There was no momentum, which is another way if there's no pullbacks on a runaway market. So what did I do after this happened? At the point of this screenshot, I moved my protective stop to lock in 30 pips. I trade with a 10 pip stop on the dollar yen. That's 3-1 on this one. If it makes it all the way up here to this target, which it did eventually, but I didn't take it there, it would be almost a 6.5-1 trade. But let's see what happened. So I moved my stop to lock in 30. And then here's the next screenshot where price is almost there. And now I have moved my stop to lock in 40 pips at this point after this sideways chop. And I'm still targeting up here, but guess what? Time had gone by. There was a good hour in here while I waited for price action. And so instead of holding on for 64 pips, which it did eventually get to, I jumped out for 56. So I got 5.6 times my risk, which is, again, outstanding in any market. So the EU hit the target for 66 pips. 8-1 risk to reward. And this one, the dollar yen, I jumped out of and took 56 pips for a 5.6-1 risk to reward. And this all comes down to the 20-second trade plan that I teach traders who've come through the virtual doors of the Price Action Traders Institute. And I can teach you, I can teach anyone this way of trading, this way of looking at the market. I guarantee you will never look at a chart the same way that you look at them once you learn this method. It's the one thing that makes all the difference in how much money you can make trading. I'm Kim Crumpus. I want to thank you for listening, and I hope you have a great day.